Hi guys, welcome to what would this be? Episode 4 or 5 of the NQNMQS model bootcamp. I'm in live time price action because I want to explain. Well, first off, this video is going to be out about rejection blocks and order blocks, and also breaker blocks because they go hand in hand with each other, and it's basically the same thing. And then I'll tie unicorn blocks in with them because it's also the same thing, just with one added confluence. So let's just get straight into the shit. Onto the charts today. We have 10 a.m. open right here. I have it marked out with this white line. Boom, 10 a.m. open. Boom. All right. So, what's the first thing I'm going to be talking about? Rejection blocks. Why are rejection blocks so good? First off, you need rejection blocks to be paired with something. So in this case, this rejection block, this 1 minute rejection block, gets formed off of tapping the 10 a.m. key open. Boom. Mark that out. You can see that you could have taken your entry right off this rejection block and absolutely printed 20-point stop loss, and you'd still be in this trade running 200 plus points. So that's the example that I wanted to show you guys right now. So you could also look at this one. I'm just going to explain basically what a rejection block is. So right here you see we have this. Boom, mark this out. Total soup. Alright, so out to the 4-hour time frame, you can see that we have this 4-hour fair value gap right here. Boom, 4-hour fair value gap. Right. Let's get onto the 15-minute. We put in a low above the. We put in a low after sweeping these lows. But would this be a rejection block? No, it wouldn't, because this 15-minute didn't turtle soup this low. At the time, this would have been actually a rejection block. But the thing is that I tend to not use rejection blocks that are still either bearish on, like in this example, or bullish if we wanted to go down. So what can we do is wait for price to resweep this low inside the 4-hour, and boom, resweep, and on the 15-minute, we can classify this entire 15-minute wick as a rejection block, and the CE, or consequential encroachment, or 50% mark of this wick would be a draw on liquidity, or a price, or a level where price can reverse. So you could look for something like that, because price has broken structure to the upside. But now I'm just going to talk about what an order block is. Let's look at the hourly time frame. So basically an order block is basically going to be a level where price comes up, sweeps out a high, and it's the last candle that's closing in the opposite direction. Or in the other case would be last up close candle before sweeping a low. So on the hourly time frame, we can see something like this is chop. We would use something like this as an order block. However, you can see that this just didn't hold, and that's for a good reason, obviously, because we put in a swing point and then we dumped. And then obviously it turns into a breaker block, but I'll explain that in a minute. Let's talk another 15-minute. I'll find an actually good order block. So we have honestly, the 5-minute is probably the best for order blocks, or like lower time frame, because order blocks I like to use as a confluence to take my OTEs off of. So let's use, okay, this is a good one. So we have, boom, this up or down close candle before sweeping this high right here. Boom. Mark that body. I usually use the body. I know some people that use wick to wick, but I just use the body most of the time. That's what I find is like the most accurate. And you can see that price trades back into this area and rejects it multiple times, and it tries to go higher, but obviously fails. So that's not like, this would have been a valid entry point if you have an OTE. Like, mark out your OTE from here to here. Boom, you have that. Boom, take your entry from there. You would have got break even on that one. But what I want to say is that order blocks are basically the same thing as fair value gaps. It's just an area where price can push higher after sweeping a high. So like what you would want to see is like a an uptrend, boom, uptrend, and then say we have instead of like it being a fair value gap right here, it's an order block. And price will tend to come down and respect this to keep trading higher, because the main reason that the market moves is external to internal. So we're sweeping out external liquidity, which is this, and the odds of price continuing higher are so much higher. Like same thing in a downtrend. The odds of price in a continuation model is way higher than price reversing like this and just dumping off. So we want to catch these pullbacks, right? That's the whole point of OTE. Like, boom, and order block matches up with OTE. Take your entry off that. That's the whole point of OTE, right? So basically, this order block is just going to be the same. It's just a PD array where price can reverse out of. So let's come back down. Let's look at the 1 minute time frame here. So let's find a swing point. Alright, this is good. So like this is like a trending market, right? So we come up right here, right? Let's go down to the 5 minute. I suck at explaining order blocks for whatever reason. But you can see that we, for this example, we sweep this high right here. Hop down to the 1 minute. And so we're going to be looking for price to pull back before we can continue higher up to this high. So what can we do? Zoom in. Let's see. This is like prime London session, so it's chopped cheese. But you can see that we have, say, this order block, or you could mark out this is your order block. Obviously, every time frame is going to have different levels. So if I go to like the 3 minute, it'll probably look a little different. Yeah, you would mark out like this, and you can see that you could have taken your entry off of like CE of that, stop loss at this low, and targeted that, and boom, you would have hit TP. But the whole point of order blocks isn't to find the levels, right? The whole point of order blocks is to pair it with your OTE entries, right? So I'm not going to just like limit a random order block. I need the order block to make sense, right? So let's just go in for this example. So this is a good thing. This entire thing, so like these 4 up close candles is all an order block, right? Because one candle fully engulfed all 4 of those up close candles, and then we've swept this low. So this would be a level where price could trade back to and then continue lower. So like this. Obviously, it never traded back to it, but it got close. We can go back down to do the same thing here. Boom. Mark out the last up close candle. We never came up to it. It was close. But you can see that most of the time it just ends up lining up with OTE. So like in this case, boom, OTE right inside the order block. Yeah, I think the 5 minute is probably the best time frame for this. Let's look at this. So, okay, right here, we sweep this high out. We have this 5 minute order block. This is like really close time frames, but we have this 5 minute order block. Boom, mark out OTE. OTE is right inside the order block. Limit order that, or take your entry off of whatever. You can hop down to the 1 minute. You can see price comes down into almost OTE, but it comes into the order block. You could have taken your entry off of like the first rejection candle. Stop loss at the low of your OTE leg, and then target whatever you want. Maybe like these highs up here, and then you would have hit TP, obviously. But that's just an easy way to explain order blocks. For some reason, I just can't explain them. But let's get back to rejection blocks, right? What would another good rejection block be? This one looks pretty good, right? It's a big wick that's rejecting. However, this one's closed bearish. Doesn't really matter. Most people use a bearish close anyway. Like, We look at the hourly time frame, it could be different. Yeah, you can see that the the hourly rejection block is bullish. So, and then you can see it's the same thing. Price trades to new highs. Oh shit. Price trades to new highs. We trade back down to the rejection block, and then we continue higher. In this case, we didn't continue higher, but you could have caught a good amount of points here, like off this low, 200 points. But the main thing I want to tell you guys is to use your rejection blocks off of key levels. So, like I showed you guys off the 10 a.m. key open today, you can use the same thing on like the midnight open. Let's find midnight open. Midnight, right here. 15 minute, 30 minute, hourly. Okay, so this hourly candle puts in a rejection block here. Mark this out. Boom, hop down time frames. This entire thing is a rejection block formed from here. So you can see that you can mark this OTE leg out. Boom. Price trades to CE of the rejection block, which is like the 0.79, which is max discount. So this is a really good, really good entry. And this is off of the midnight open. It's off the midnight open rejection block too. So, boom, 4.5 R, just like that. Perfect. That's a beautiful trade. You could do the same thing with pretty much every single key open. Let's look at the 23. This, the 2 a.m. open. And you can use every time frame. Every time frame works for this. So, let's see. 5 minutes. And you want your rejection blocks to make sense, right? If we're in a trending market higher, you're not going to want to take a bearish rejection block. It doesn't make any sense, right? It's just going to get ran through. But yeah, that's what I want to say. So this one really gave nothing. Let's look at the Asia Open right here. See if got anything there. Not really. 1 minute maybe? No. If anything, you would have used this, but that's too low time frame. I would say mostly the 5 minute or the 15 minute or higher. I'll go to another example, maybe 10 a.m. here. 10 a.m. opens, boom. Alright, perfect. We have this. We sweep out this low, hop down to the 1 minute time frame. Oh my god, I just fucking stabbed my eye. Oh my gosh. Alright, whatever. Alright, so this is gonna be a valid rejection block probably. Oh my god, I actually stabbed my eye, bro. Fuck. Oh my gosh, this is cooked. It would have been this. We rejected this 5 minute gap. It's the tiniest 5 minute gap ever, but we rejected it and it created the rejection block. So yeah, you can mark out that 5 minute wick and price trades down. And the same thing, this is the most important thing. When we have a low inside the rejection block, it has to get swept out before price reverses. Same way as like a fair value gap. Like there's no, like you're not going to use a fair value gap. Like say that we did this. Price isn't just going to reverse right here. That's not what's going to happen. It's going to sweep out those lows and then reverse. It's the same thing. So you can see price sweeps out this low and then trades higher. So cool. All right. Next up, let's talk about breaker blocks. This is probably one of the more important things in my model, because the breaker block is basically the same thing as the IFVG. It's a more powerful version of an order block. in my opinion. And other people might say different, but hourly breaker blocks are probably my favorite confluence in terms of finding an actual PD array. Let's look for a example here. So again, we need to sweep out some sort of high. Let's look at the 15-minute time frame actually. Actually, let's go to the 4-hour. So we sweep out this high. What would the order block be of this? It would be these two up close candles. So once we close below this candle, right, like down here, we close below down here, we can wait for price to pull back into the breaker block to trade lower, and that's exactly what happens if we hop down time frames. You can see that going down, that turns into a breaker block. You have your OTE of this entire leg, and you can see it lines up like just above that high, and then it rejects perfectly. Cool. Same thing happens on pretty much every time frame. You can see something like this. We sweep out these highs, mark out this order block that turns into a breaker block right here. We're actually trending up towards that right now. This would be a good breaker block on the hourly time frame. But I also like the 5-minute. The 5-minute's pretty good too. We can use something like this. So we sweep out this low. Low of the day. We have this up close candle right here. Let's look at the 1 minute, see if it's better. Yeah, we have this 1 minute. And this ended up giving the 10 a.m. entry today too. So you can see that it was super stacked. We had 10 a.m. inside of this breaker block that gave this entry for longs. Yes, let's go. Let's look for more. We have price sweeping out significant level here. These lows. Look for the last up closed candle. It would be this. But all of these would be breaker blocks along this path. So this could be a breaker block. Boom. Once we close above it on the 1 minute, you can see price closes above it, then we retest it, and then we keep trading higher. But again, all of these confluences are to be paired with the other things that I talk about, which is the OTE, the fib, all that sort of stuff. So we can look, let's go way back. Let's go way back, way back, way back. Oh, equal lows. That was a brutal day, brutal day. Let's go right here. This is, okay. So you can see this was Friday the 29th. So where would our order block be? It would be this candle, or yeah, this would be the order block. So then you can see we close below it, right? Well, you can see we close below it, boom. And then price retests the order block like that. And what does the retest match up with? That is not what I picked. What does the retest map out with? The 0.618 is the bottom of the breaker block. Boom, take your entry right off the 0.618. Stop loss at the OTE high always, or like above the 0.79. And watch that shit just print money. Boom, for our right off that breaker block. And the best part about this is I'll tie it in with the unicorn block. So now let's actually get into unicorn blocks. So we sweep out these lows right here. Boom. Okay, cool. Where would our order block be? It would be this candle, right? We close above it. Boom. Close above it. Nice. What do we have inside of this breaker block? A fair value gap. This entire thing is going to be a fair value gap. So we can mark that out. And when you have a breaker block with a fair value gap inside of it, it's going to be a unicorn block, which is a super, super rare setup, especially when it's paired with OTE. It's like one of the highest probability setups you can take. And you can see we form this and mark it out. 0.5 lines up like right in the middle of it. Could have taken any sort of one of these entries. Let's just do this, for example. and you could have taken that up to those highs. Perfect. That's a perfect setup. And unicorn blocks are pretty rare, so especially on the higher time frame, if you see a higher time frame unicorn block, I would take it like almost every time. Let's look for a higher time frame example. Use so we sweep out these lows. This wouldn't be great. It's all time highs. Okay, you can use this. So we have this. No, it wouldn't work. That wouldn't work. Wouldn't work. Alright, let's use this. Let's use this. Alright. So we have this 15-minute order block that gets ran through. Turns into a breaker block. Cool. After we see these highs, obviously. Boom, close through it. This is like basically the same example that I just said. And what do we have inside of the breaker block? This fair value gap, right? Same time frame. It has to be the same time frame. And basically, you can take your entry right at the start of the order block because you're going to want to see this fair value gap hold. And if you mark out your OT, you can see it's giving you the exact same thing pretty much. Mark this out like this. The 0.705 is your entry basically. Take it like this. Stop loss at the high of the rejection block. And target whatever you want. All these lows that are stacked up. And boom. Nice. Perfect. That's pretty much it for this video. I mean, I'm just kind of giving you guys confluences because I'm going to tie them all into one trading setup or model at the end of the bootcamp, because I want to make every single confluence that I trade as simple as possible, because it's kind of tough for me to explain some things because they're just like hard to explain, if you know what I mean. But once you guys kind of get an idea of everything, and then I actually tie it into one model or setup at the end, and then I'll give you guys a backtesting video and what to look for, you guys will understand this, and it really won't be too difficult, but you just gotta bear with me with this boot camp because I'm still learning how to teach. That's the toughest thing for me, but yeah, I'm getting better every day. And if you guys have any questions, leave them in the comments. If you're interested in the Discord, it'll be in the bio of this video. Same with my socials. And if you have any more ideas for the bootcamp or just any other videos, let me know. And yeah, I'll catch you guys in part 5.